Hey, what's happening, guys? Dan Darrow here with another options and play video update. So we're on the eve of earnings season, and I'm super excited. Uh, not specifically excited for bank reports, but excited for earnings season. Okay, and tomorrow morning, JP Morgan, Wells Fargo, PNC. It's going to be a very financial bank heavy morning. Um, and that's really what's going to get us going. Um, these haven't been the best trading stocks over the last few months or the last year and a half. I mean, go back as far as you want. Action hasn't been great. Year to date, these things have been a little bit more choppy than some of the other areas, right? Like JP Morgan, still kind of it's up. It's up off the December low, obviously, but still, I mean, it's got some work to do. Wells Fargo's the other big name. That looks a little bit worse at the moment. Again, still up very nicely off the December low, but not anywhere near where it was last month or where it was at the beginning of December, even, right? So it's still way off those the best levels from then. Um, so let's talk estimates, things to watch out for, and then I'll go over the price to moves and some key levels. All right. So for J.P. Morgan, the consensus estimate is 232, so $2.32 on revenue of 28.07 billion. Right. The revenue growth expected to be down year over year. All right. This is something you're going to see with a bunch of these banks. Wells Fargo. Estimates here, $1.08 on revenue of 20.87 billion, and the revenue growth here is about negative 16.7% year over year. Okay, so both you can see revenue estimates are supposed to be down. Um, what is going to be key with J.P. Morgan is trading revenue, right? I mean they've been warning about lower trading revenues. Um, Wells Fargo, it's going to be the mortgage loans, right? They're a bigger mortgage bank. For both, you're going to want to hear about the inverted yield curve and the impact that might have, right, on their lending portfolios. So uh, it seems like a lot of headwinds. To be honest, though, kind of similar setup to what you saw last quarter with these guys, right? I mean, um, market was in a pretty strong rebound in January, and these numbers really weren't anything special. J.P. Morgan and Wells Fargo probably the two two of the weaker reports. Citi was better, Bank of America was better, Goldman was better. So JP and Wells were two of the weaker names. JP, you can see here on this day, opened red, turned green. Wells Fargo wasn't able to finish it, but the following day it reversed and snapped right back. So they bought bad, and I feel like that's a possibility again this quarter. It's going to remain to be seen. I mean, if it's really bad, maybe not. But if it's if you see like a marginal moves lower and these stocks hold their support, strong tape, maybe people are they look at it more as like a weight being removed, right? They say like, oh, it's not as bad as feared. Maybe buy. That's what I'll be watching. In terms of the price to move, so Wells Fargo, they're looking for about, let's say, about $1.35 to $1.40. Okay, so about, say, like 3%. And for J.P. Morgan, it's going to be J.P. Morgan's going to be about, say, just about 250. All right, so about 2.5%, give or take. All right. Um, Again, last quarter they bought bad. If that happens again, J.P. Morgan seems to be in a better position, right? I mean, if it can get up through the 200-day, so if it's like a marginal pull in, that you got the moving average cluster area here. If it can pop actually and get through the 200-day, then there's a decent amount of upside there, right? Wells Fargo, if it gets hit, it's really going to have to hold like this 47 to 46.50 area, because underneath the bottom could fall out. I mean, some of this pressure is due to the CEO stepping down, so there's a few more headwinds. a little bit weaker setup, a little bit more work to do on the upside to really start to look better. But what you want to watch is 47 to 46.50. Underneath that, it could really start to slide. Okay. The way this works typically is that with JP Morgan and Wells Fargo, you'll tend to get a reaction in Bank of America, Citi, Goldman, right? So if you're looking to try some sympathy trades, those would be your best bets because they don't report tomorrow, right? Citi, Bank of America, Goldman, even Morgan Stanley. None of those are priced. Well, they don't have the catalyst in them, right, because they report next week. But they should react to the JP and Wells Fargo numbers. So if you're looking for a sympathy trade, those are the ones you probably want to look out for. Also, XLF, all right? Thought that this was an interesting straddle candidate, right? Get rid of these. So you have this pretty well-defined range bumping up into the top of resistance, right? If good, you could see it possibly breaking out, right? You get the move higher through the 200-day. If it fails here, well-defined range rolls over, you're probably looking then to move down into like the 25, right? Like the low 25s. I mean, like that's the area of support that's been well-defined. That's where we were a couple weeks ago. So I thought that was an interesting way to play it. Obviously, multiple ways to play these reports. You could play the actual companies reporting. You could play the sympathy trades. You could play the ETFs like the XLF. So I wanted to put that on your radar. Get the expectations out there. The price to moves. Earnings season's here, and let's get going. I'm ready. I'm prepped. I'm excited. I've been waiting for this for a couple weeks, so let's go. All right. So hope you guys have a fantastic night, and best of luck if you're playing any of these earnings reports. Keep an eye out for earnings on the radar video tomorrow, because that's going to be covering all the names for next week, and next week is really when things start to pick up. You got some bigger names next week. All right. So again, have a great night, and I'll talk to you guys all tomorrow.